Kenvue is a new name for a company that has been around for more than 135 years. It was formerly part of Johnson & Johnson, but it separated in 2023 to become an independent global consumer health leader. Kenvue owns some of the most iconic and trusted brands in the world, such as Tylenol, Neutrogena, Listerine, and Band-Aid. Kenvue's purpose is to realize the extraordinary power of everyday care. It believes that daily self-care rituals can have a profound impact on your well-being, inside and out. Kenvue combines the power of science with meaningful human insights and digital-first capabilities to deliver personalized health solutions to more than 1 billion people across the globe. Kenvue's products cover a wide range of categories, such as pain relief, skin health, oral care, wound care, baby care, women's health, and more. Kenvue is also committed to sustainability and safety, using materials that reduce its environmental impact and ensuring its products are carefully tested and evaluated against internationally recognized standards. Kenvue began trading on the New York Stock Exchange in May 2023 under the ticker symbol KVUE. It has a market capitalization of about $50 billion and generated $15.1 billion in net sales in 2021. Kenvue is led by CEO Thibaut Mongon and non-executive chair Larry Merlo, who have decades of experience in the consumer health industry. Kenvue is a company that aims to bring a new view of care to consumers around the world. Kenvue is a consumer health company that was spun off from Johnson & Johnson in 2023. It owns some of the most well-known brands in the world, such as Tylenol, Band-Aid, Listerine, Aveeno, Neutrogena, and J&J's namesake baby products. Kenvue went public on May 4, 2023, in one of the largest IPOs in more than a year. It priced its shares at $22, toward the high end of its target range, and raised $3.8 billion. The IPO valued Kenvue at about $41 billion. But what are the main risks and opportunities for Kenvue's IPO? Let's take a look at some of the factors that could affect its performance in the stock market. One of the biggest opportunities for Kenvue is its stable and profitable business model. Kenvue has a diversified portfolio of products that cater to various consumer needs and preferences. It operates in 4 segments: over-the-counter medicines, oral care, skin health, and baby care. Kenvue's products are sold in more than 150 countries and regions, and it has a leading market share in many categories. Kenvue generated $14.7 billion in revenue and $2.9 billion in adjusted operating income in 2021. It also has strong cash flows and plans to pay a dividend to its shareholders. Another opportunity for Kenvue is its potential for growth and innovation. Kenvue has a robust pipeline of new products and line extensions that could drive organic growth in the future. It also has opportunities to expand into emerging markets, especially in Asia-Pacific and Latin America, where consumer health spending is expected to increase. Moreover, Kenvue has a culture of innovation and collaboration that could help it adapt to changing consumer trends and preferences. For example, Kenvue recently launched a digital platform called Kenvue Connect that allows consumers to access personalized health and wellness solutions. However, Kenvue also faces some significant risks that could hamper its performance. One of the main risks is the intense competition in the consumer health industry. Kenvue competes with other large players such as Procter & Gamble, Unilever, Colgate-Palmolive, GlaxoSmithKline, Reckitt Benckiser, and L'Oreal. These competitors have strong brands, marketing capabilities, distribution networks, and financial resources that could challenge Kenvue's market position. Kenvue also faces competition from smaller players and private labels that offer lower-priced alternatives to consumers. Another risk for Kenvue is the regulatory and legal environment that affects its business. Kenvue is subject to various laws and regulations that govern its product safety, quality, efficacy, labeling, advertising, pricing, distribution, and environmental impact. These laws and regulations vary across different countries and regions and could change over time. Kenvue could face regulatory actions, fines, lawsuits, product recalls, or reputational damage if it fails to comply with these requirements or if its products cause any harm to consumers or the environment. In conclusion, Kenvue's IPO offers investors access to a high-caliber company with a stable and profitable business model, a diversified portfolio of products, and a potential for growth and innovation. However, investors should also be aware of the risks that Kenvue faces from intense competition, regulatory uncertainty, and legal challenges. As always, investors should do their own research before making any investment decisions. Kenvue is a consumer health company that was spun off from Johnson & Johnson in May 2023. It offers a portfolio of well-known brands such as Band-Aid, Listerine, Neutrogena, Tylenol, and Zyrtec. But how does Kenvue compare to its competitors and peers in the market? According to its IPO prospectus, Kenvue generated $13.8 billion in revenue and $2.6 billion in net income in 2022. Its revenue grew by 4.5% year-over-year, while its net income increased by 10.4%. Its operating margin was 23.1%, higher than the industry average of 19.6%. Kenvue also paid out $1.3 billion in dividends to Johnson & Johnson in 2022, implying a dividend yield of 3.4% based on its IPO price of $22 per share. Kenvue operates in 4 segments: oral care, skin health, over-the-counter medicines, and women's health. Its oral care segment accounted for 28% of its revenue in 2022, followed by skin health, 26%, over-the-counter medicines, 25%, and women's health, 21%. Kenvue claims to have the number 1 or 2 market position in each of these segments globally, except for women's health where it ranks 3rd. Some of Kenvue's main competitors include Procter & Gamble, Unilever, Colgate-Palmolive, Reckitt Benckiser, and GlaxoSmithKline. These companies have similar or larger market shares than Kenvue in some of the categories where they compete, such as oral care, skin care, and over-the-counter medicines. They also have more diversified businesses than Kenvue, with exposure to other sectors such as household products, personal care, food and beverages, and pharmaceuticals. However, Kenvue has some advantages over its rivals as well. For one thing, it has a strong brand recognition and loyalty among consumers, thanks to its heritage from Johnson & Johnson and its focus on innovation and quality. For another thing, it has a balanced geographic mix of revenue, with 46% coming from North America, 24% from Europe/Middle East/Africa, 18% from Asia Pacific, and 12% from Latin America in 2022. This gives it a broad customer base and an opportunity to grow in emerging markets. Moreover, Kenvue has a robust pipeline of new products and line extensions that could drive its future growth. For example, it plans to launch a new oral care brand called Smile Sonic that uses sonic technology to improve oral hygiene. It also intends to expand its skin health portfolio with new products such as Neutrogena Hydro Boost Gel Cream SPF 50 and Aveeno Com Plus Restore Oat Gel Moisturizer. Additionally, it aims to leverage its over-the-counter medicines expertise to enter new categories such as digestive health and immune support. In summary, Kenvue is a leading consumer health company that has a strong financial performance, a loyal customer base, and a promising product pipeline. It faces stiff competition from other players in the market, but it also has some unique strengths that could help it stand out and succeed.